In this video, you will learn how to increase your win ratio by following a few simple rules. To start with, we need to talk about the setup. What type of structure there is in every turn in the market structure. Every swing that you see in the chart is going to contain either this setup or this one. So let's quickly explain them. In the first setup, we are assuming that we are on an uptrend, price is making higher highs and higher lows. You can see that we have a stop hand here by price making a higher high, followed by a lower low, breaking the structure. After this break of market structure, price simply return to this to the region of this break of market structure, which is the order block, and then continues going lower. In this second structure, instead of price making a stop hand, it fails to follow the previous structure, which in this case was a bullish one. Price fails to make a high high and instead makes a lower high. This is the shift of market structure. After this lower high, price again breaks the market structure and returns to origin to follow the move. What is the problem about these simple setups is that if you apply them anywhere instead of in a specific place in time, you will end up losing every trade, okay? The third way of entering a trade or looking for a setup is by looking at the Wyckoff accumulation or distribution schematic, which is more advanced, and we are not going to touch that topic in this video. So to frame what I want to show you guys, we are going to talk about a trade I recently sent to the community. This trade was a Euro USD long, as you can see here, and this Euro USD long ended up hitting the target beautifully very quickly. So these questions that I have here are going to be a guideline for you to understand the order flow of the market, because how can we identify which order block or which area is going to hold and not going to be broken? Simply following the institutional order flow. And to follow the institutional order flow, you have to mix the market structure with the liquidity and understand what the smart money is showing us in the chart. So first, the first question we have to answer ourselves is, are we on an uptrend or are we on a downtrend? On which time frame are we building our story for our potential setup? So by the time I was looking at this chart, I was around here. Let's start with this. Let's look at the daily chart. As you can see on the daily chart, we came from stop hunting this high after this uptrend and then breaking the market structure to the downside. So the direction on the daily chart is to the downside. After this break of market structure, price returned to a region and made a new leg down. So what can we expect for price to do next? To do next after this low, we can expect a lower high, which was formed here, but then price failed to go lower. But first, let's go and answer that question that we have here. Are we on an uptrend or a downtrend? We are currently on a downtrend on the daily chart. So daily chart is bearish. But let's go to the next question, which will help us to build the next story. Is price successfully doing what it's supposed to do, or is it showing willingness to change the direction by building a liquidity in the opposite side and breaking the structure? If so, then anticipate a reversal. What do I mean with this? Let's go back to the daily. You can see that here price made a potential lower high. Remember that a lower high cannot be called like that until it breaks the structure to the downside. So this is only a potential lower high. And you can see that price failed to go lower. In fact, what happened recently? We had these lows and this low here. We had a move to the downside, and then price was coming from that move by grabbing that liquidity on the sell side and failing to break the last lower low. Price is supposed to make a lower low, but is failing so far to do so. So when price is failing what it's supposed to do, then the next logical step is to think that price might do a reversal. As you guys probably noticed, I put a lot of effort on these videos. So if you are liking this content, please help me grow this channel by liking, subscribing, and turning on the notification bell.
Let's do this.
So now let's go into lower time frames and see what happened when price was approaching the last lower low on the daily chart. You can see that when I was here on this daily chart, I immediately knew that the sell side liquidity on the daily chart, which was this one right here, was taken down by this down move. So where is price now in regard with the current structure? Are we on premium or are we on a discount level? So if we are assuming that price might reverse to go higher because price failed to make a lower low and instead we had a move to the upside, then we have to know that price is currently at a discount level. Because if price is failing to grab the liquidity on the sell side on the daily chart, then based on the daily chart, we need to identify why price might be failing, because there is probably a target on the buy side where price is going to go next. Okay, so where is price now in regard with the current structure? We are on a discount, because if we look at this current structure, you can see here we have a tiny little void and we have these relatively equal highs that might be targeted. So price is failing to grab the sell side, so this buy side will be the target. And what do we have here on the buy side in terms of the daily chart? We have this old high here that is containing a lot of buy side liquidity or buy stops, and again this void that is attracting price. So which stop hand or order block where smart money has previously accumulated orders is price working around in regards to the most recent break or market structure and the highest time frame discount or premium level? So as we said earlier, price came back down, testing and breaking this, taking the liquidity below this daily low and testing the last lower low that wasn't broken. After this test, you can see a price moved higher and broke the market structure by breaking the last lower high on lower time frame. So we can say that on the daily chart we have a potential reversal to the upside, and on the lower time frame we have a bullish break or market structure. So now on the lower time frame price is bullish. Okay, so price is working around this massive move to the downside, which is the order block or the stop hand on the daily chart. If we look at this, we can see that price is making lower lows and lower lows, basically attacking the sell side liquidity over and over again by making these lower lows. You can see that the buy side liquidity, basically the old highs, are still intact. Price is not attacking the buy side liquidity. Why is price doing this? Because they are trying to take out as much early buyers as possible. Because every time price makes a low and an attempt to go higher on lower time frame, we probably have a break or market structure. And this break or market structure on the lower time frames is inducing new buyers into the market. And those new buyers are placing a stop loss on the most recent low. In this case, for example, was this one. So price goes down, attacks that low, grabbing all the stop losses of these buyers. The same happens here. You can see we have on a lower time frame a break or market structure inducing buyers with bullish sentiment that are going to be placing the stop loss. But why price is moving lower is because we have these order blocks that need mitigation, and we also have this void that needs to be filled, or at least partially filled. So price is moving lower into a discount range. We are currently in this range from this low here to this high here. The discount range below 50% of this entire range is where we would ideally look for potential buying opportunities. So we are seeing how price is attacking the sell side liquidity over and over again. At one point here, you can see a price makes an attempt to break the most recent high here, and what ends up happening is that price creates equal highs. So we know that equal highs is buy side liquidity. After this buy side liquidity was created, we can see we have another move down, stop hunting now this low. And after this low here was stop hunted and price is coming from a discount level, we have the first break or market structure attempt to drive price higher. So this setup, which is a stop hunt with a break or market structure, is happening on a discount level with having in mind that we have buy side liquidity being created, which is the excuse to go higher, and we also have this potential void that might be filled. So when I grabbed the chart, I saw all this story, but we were here, so we missed this first return to origin here. The core thing that you need to understand here is that now price is building an uptrend. Inside of this uptrend that is being built, we have to identify the key level. What was the most recent stop hand that is coming from the most discounted level inside of our order block that grabs liquidity on the daily chart. Let that sink in. If you are maybe confused, try to rewind the video and annotate every word I say, and then try to reason it for you to have a better understanding of what I'm trying to say. So the most recent liquidity grab or stop hunt on the most discounted level on our main key level, which is this order block, was this one right here. So this last move down is our core order block where we are going to try to look for a potential setup for an entry. So what is price doing here? Price, we can see is making higher highs, higher lows, higher high, higher lows. What happens? Price makes a high high here. You can see that the bodies of the candle are failing to close above the most recent high. So maybe this is a stop hunt. We don't know that yet. After this stop hunt happened, we have a break of market structure to the downside, as you can see here. And now price is trying to move lower. If we move forward, we can see a price made lower, breaking a structure one more time. So this stop hunt and break of market structure is giving us direction to the downside. Price returned to origin, which could have been another trend setup, and then made a new leg down. Inside of this structure, we are currently from this low to this high. Where is the liquidity inside of this structure? Where we have this old low here, we have this low that was created right here, and that is containing sell side liquidity. Again, if price is going to move forward to higher in this case, it will try to take out as many buyers as possible before the move. So those buyers, again, are placing the stop losses below these lows. Price is stop hunting these lows, as you can see, and then if we go to a lower time frame, when I was looking at this, we had this beautiful break or market structure right here. What happened here? We have a stop hunt and a break or market structure, the first setup that I show you. So after this break or market structure, I immediately detected that price was coming from the most discounted level, the most recent stop hunt, which was this one, and providing me with this clear setup where we stop hunt and all low inside of the range and then break the market structure. Where is the order block? The order block is this one right here. If you want to refine it, you can see we have this beautiful engulfing candle taking out the structure. So we can refine the order block to be this one right here. Here I attempted to enter a little bit lower, and you can see that I missed my original entry just by 0.6 pips. And then price went higher. And where did it go? To our original void that was attracting price, because price needs to rebalance this. So you can see how I built a story to create this setup. And there is one more thing that I was forgetting, that if you apply all this and try to look at a setup on a specific time frame, either between 1 to 5 a.m. on the New York time, which is the London kill zone by ICT, the London open kill zone, or the New York kill zone between 7 to 10 a.m. New York time, the odds of this setup working are going to be greater. So basically, again, to summarize all this guideline, you need to ask yourself this question, and while you are answering this question, you are going to be building in your mind this beautiful liquidity story that is going to help you identify which is the order flow, which is the most recent stop hunt is going to hold, which order block, which stop hunted is going to hold, and where is the next liquidity in terms of the daily liquidity. As you can see, if you watch my previous videos, in this day we have the high of the day that I mark here as high of the day as a short-term target for this buy opportunity, and of course the buy side liquidity that we have here, which is the all high. After price hitting this level, which is a premium level of this bigger range, you can see that here we have another setup because price failed to make a high. So if price is making high lows, what is it supposed to do? Make a high. Here is failing to do so, so we have a potential shift on market structure. So if you waited for a break on market structure in this case, you can see that here we have a break on market structure. After this break on market structure, you can wait for a return to origin. Why price might go lower? Because we have a void, and that is one of the questions that we have here, which is the last one. Where is the next pool of liquidity in the same direction of the most recent break or market structure that follows the overall market structure? This will be your target. So in this case, this push up, we are on a bullish structure now on this trend. After a higher high, what comes next? A lower high. Sorry, a higher low. So after a higher high, we can anticipate a higher low to be formed, and we can actually trade that, keeping in mind that this is only a retracement of a bullish move. So we are trading against this bullish trend. I say this because sometimes price might surprise you making big moves on the same direction of the current trend. So keeping that in mind, you have to have a very strict risk management if you take this trade. So here we have a shift from market structure, break or market structure. We have a short-term target, which is this one, and a potential mitigation of the most recent stop hunt, which is this one. You can see that in spite of price failing to hit our entry, we still have all this imbalance, all this void that needs to be filled, and this last order block or stop hunt that grab liquidity before displacing higher. So what happens next? Price returns to the origin of this break or market structure, as you will see now, and after hitting this order block right here, you could have taken a trade aiming at these lows here, which are equal lows, and all this void that is attracting price. So what happens next? Price goes lower, fills the void, and hits our entry. Now it does hit our entry and then hits TP, as you will see now. Of course, if you want to refine this entry to have a bigger RR, you can see that the only thing you need to know is look for another setup. Here we have a stop hunt happening at the area where we are looking for a potential buy, and then a break on market structure because price is closing above the most recent lower high. So after that, you could have taken a trade based on this stop hunt. You can see that if you use this order block right here and this wick, you can have a much smaller stop loss and a much bigger risk to reward trade. This trade ended up working beautifully, and if you want to refine it even more, you can select this engulfing candle. The previous candle is our refined order block, and you can see that the RR for this trade now aiming at what? At these equal highs and at this last stop hunt here on the left that wasn't mitigated. Then you have a massive RR trade. And boom, target hit for these equal highs here. And you can see this trade end up hitting how much? 32 RR. So you can pass 3 FTMO if you want on this trade. So the target for this trade, again, we have to look at the daily objectives. What is price doing? It's trying to go lower. Is it successfully going lower and breaking the structure to continue a downtrend? Here, no, it isn't. And we have presented ourselves with a setup on a discount level. Where are the daily liquidity pools? Above these equal highs and on this last order block that we have here. So this would be the first target, and maybe this order block along with these highs that could be taken down as well are our next target. But if you got a nice 32 RR trade, you probably want to get out with that amount of money in your bag. That's all for this video. If you liked it, subscribe, and see you guys in the next one.